everyone? Welcome to the Stock Market Morning Prep video for Thursday, May 21st. We got 2 days of trading before the long weekend, the Memorial Day weekend here in the U.S. Yesterday we had a little bit of a pop-up, made new highs again, and then we reversed, which that is not a good sign that equity markets can't push higher after some so-called decent news that market participants were looking at, or at least thought it was, when the Fed announced FOMC minutes came out. And they were talking about, some of the members were saying that we're going to hold off on a rate cut, a rate increase in June, and possibly put that out for either September or December, and that rallied the markets. Well, we did get that in the morning, and then we reversed, as you can see here. This is also the 5-minute SPY, S&P, ETF, and as you can see, all week we have gone absolutely nowhere. We have gone nowhere this whole week. Now, going out a little bit further, guys, we all know that the weekly charts look great, but we are bumping into some heavy resistance on the weekly and monthly charts, okay? Remember, guys, we've been up 200% since the lows of 2009 without an 8 or 10% pullback. That's going to give us at least 5 years. So, do we remain cautious? Absolutely. Why? On top of that, we have the transports really starting to break down pretty hard. That is not going to go unnoticed. Eventually, at one point, money managers and big fund managers are going to lighten up their long positions, putting some pressure on equities. That does not mean it's going to happen today. All I'm saying, for those of you who are swing traders and longer-term investors, please use caution up at these levels. Doesn't mean that the markets are not going to go higher. We are in an uptrend. We have no volume. There's a lot of cracks in the wall that can say that we have that we've been showing you during the course of the coming weeks. Now, we also are not short, right? We look to possibly have some sort of a reversal because we're coming into a holiday weekend. Now, when markets are doing nothing but just kind of grinding higher on low volume, usually in 28 years I'm doing this, we have some sort of reversal, meaning that market participants begin to start taking profits ahead of the long weekend because they don't want that exposure. So we could see a little bit of reversal. So I'm looking for today possibly selling rallies, selling weak rallies rather, and then hopefully to fade that for that move lower, and anticipating that reversal for today and going into tomorrow. Okay. Now, for those of you who are not familiar with fading or selling rallies, please stay away and look to only do one thing and buy dips into support, because that was really what's happening. But remember, we're up a little bit now. Actually, we're down a little bit now in the pre-market. We did pop up a little bit, but we still remain red. So that gives me an idea that we possibly will be heading lower. All right, so let's look at the rest of the charts here. XLF broke out on this little bit of consolidation, but the ultimate breakout is 25. Everybody is eyeing it. You could see it on the weekly chart. However, we came out with a big news in the banks that they are getting fined millions of dollars because of manipulation in the Forex market. So that's not good. Is that a good sign that the banks that we're dealing with are manipulating the markets? So that is not a good sign. That's still not good news. As much as people think it's not a big deal for the markets, I think it is. Okay, so that's not a good sign. Does the XLF start to revert back down again now? Maybe that might be a catalyst for some weakness. I don't know. It's too early to tell, but I'm going to be watching the banks real closely, guys, okay? Because if the banks and financials remain under pressure tomorrow, Tuesday, you're going to see equities start to get softened here, okay? So that's another thing. Spiders, as you can see here, we did break above this ascending triangle, but we went nowhere here for the last 2 days, okay? Wednesday, Tuesday, we did pop up on Monday, but other than that, we've had inside days the rest of this week. So it still needs to prove itself that we are going higher, okay? I do think that the markets look extremely tired. Breaking out on no volume is not really any conviction at all. Russell 2000. Another doji. We have a long-legged doji here. We had a doji previous day. So again, really not much of a conviction, all on low volume. Use caution is what I'm saying. If I'm trading And when I do find something that I like, I'm taking my profits rather quickly and tightening up my stops. Okay, that's just how I'm doing it until this market starts to reverse, which I think is coming rather quickly. Transportation sector, weekly chart of the ETF IYT. Horrible, horrible looking chart. We have officially have broken down. Okay, now remember, we still have today and tomorrow, but we have our official close since 2012, guys. October of 2012, just before Sandy, Hurricane Sandy, we have not broken below on a closing basis since then. Well, we have 2 days, and it might happen this week. Now, I like to get 2 weekly closes below to really say that we have really broken down and broken below that 50-day moving average. You can see here in red. Not bad, not a bad looking chart if you are a short seller. If you are a long seller, then a long buyer, excuse me, then I would be using caution here. Okay, the airlines just got crushed yesterday. As we all know, the railroads are really doing poorly, and that is really a good sign of is the economy chugging along, or is it slowing? Well, the railroads are the major catalyst of moving product around the country, and when they start to slow down, that's not a good sign at all. Okay, so that's the weekly chart. Take a look at the daily chart. We have broken yet again below the 200-day moving average. This is just a very ugly chart, guys, and I'm telling you, if this does happen and we break down hard, we have a thin zone here. We could test this pivotal low here back from October of 2014 rather quickly. So just please pay attention to those transports, okay? Diamonds. What can you say about the diamonds? Inside day from the previous day, trying to break out here, but again on very, very low anemic volume. Monday was the lowest, the second lowest trading day of the year. I looked it up, and that was the breakout. So is that convincing you or convincing me? Absolutely not. I am not convinced on this breakout because there was absolutely no volume. It was the second lowest day of this year. Okay, so I mean we're 5 months into it, almost 6 months, and this just doesn't look so great. So just please use caution. Okay. Lastly is the Qs. Again, long-legged doji here, inside day from the previous day. So it needs to prove itself. I would not be surprised if we get a reversal from being long to actually shorting the market in the next couple of days. Let's be patient. Let it come to you, guys. If it doesn't feel right, step away. Remember that you do not have to be in a market 8 hours a day here, okay? Let's just keep that in mind. Have a great day. Enjoy the long weekend. There will be no video tomorrow, but we'll resume on Tuesday. Again, happy and safe Memorial Day weekend, everybody.